Alright team, so welcome to module 5. Here we're going to go through support and resistance and the importance of support and resistance in terms of trading. So to jump straight into the charts guys, we're looking at the Nasdaq chart on the hour, and as you can see, price is pretty much going sideways. It's going sideways, going sideways. So what can we see? To break this down further, we can see that there's a clear support level here, which basically means that's an area, a line, or a zone. Look, this, you can keep dragging this across, keep dragging this across all the way across. But we're just going to be working in this sort of area here, and it's just basically, you can imagine it as a floor that price has hit and bounced off of several times, which basically means it's failing to break that zone. So a level of support and resistance always goes horizontally. And like I said before, it can be a line, it can be a big zone, or it can just be a rough area. And it's all we're looking for is a number of times that price has come into that zone and reacted away from it. So as you can see here, we've had 1, 2, call that 3, 4, 5 reactions away from this zone, which is good. It means that this zone held, price did not break below it. Okay, so likewise to the upside here, we can mark out our resistance zone where price has come up to it and it's reacted from it again. So this is the ceiling. Likewise, it goes horizontally from left to right, and we're just looking for where price has come into that zone and reacted from it. So as you can see, there's several times price has entered the zone there, and again there. For the last time there, it's reacted down, gave everyone this fake move. This was basically as the bombs were going off in Iran. This is Monday morning, as you can see from the market gap, the open, and everyone thought there was going to be bloodshed. Price was going to completely melt. This is why price action is so important, because if you just watch it, if you're just listening to the news and you're listening to the narrative that the guys are putting out, the news that are putting out there, it's making people behave fearless in fear on purpose. So Monday morning, big wick down, broke pretty much through the support, but not quite. Everyone's thinking the markets are going to sell off, the economy's in tatters, there's bloodshed in Iran and whatever else. Lo and behold, price just completely reverses, which is why it's so important to just trade price action and not listening to what's going off in the world. And as you can see, it's come up to our ceiling, our resistance zone, and instead of bouncing off, which is what we've anticipated however many times previously, it's actually burst straight through, and it's not come back, right? So that being all-time highs, so price is currently at all-time highs now. What can we see? Well, it's hard to trade price when it's at all-time highs because we've got nothing to the left-hand side, no historical data to go from. So what we need to do is we need to wait for price to show us, to create these levels, these areas where we can trade from. You only want to be trading from a floor or a ceiling. Just think of it like that, because anywhere else in the middle, you could get caught out, especially if you're jumping down the time frames. There's a lot of noise, there's a lot of things happening where it's not really concrete. You need to be trading from zones. You wait until price comes into your zone. So as we can see here, price over the few last couple of weeks has created another support level where it's hit 3 times. This is a strong zone, clearly, and it's reacted from it. What can we see here? Price has created itself a ceiling. That's price has reacted off it 2 times there, off the floor, and it's gone straight through the ceiling. Now what can we see? When this happens, this is great. The ceiling stays as it is, but instead of being a ceiling now, instead of being a resistance level, it now flips to a floor or support level. As you can see, price has gone through, and now it's bouncing off that several times, which we can use now for support. So that being said, how we would use that, we would wait for price to come into our zone, our floor at some point today, and then we would look to capitalize on a continuation long, taking out these highs. For example, if price comes down and it breaks through the zone and then comes back to the zone to retest, then we'll be looking at continuation lows into sort of this imbalance here, or the floor, the previous floor below. So that in a nutshell, guys, is support and resistance, and that's its importance. So like I said before, I'll just reiterate that point. I don't want you guys taking trades anywhere outside of support and resistance levels. You just have to wait. Trading can be sexy sometimes in terms of, yeah, it's lucrative, but the most of the time it's quite boring, it's quite monotonous, and it's a lot of waiting and patience. So the market taker strategy has been devised, it's been adapted to my trading style. So I'd only wait for price to come into my zone during session open. So that's the first 2 hours of New York Open is when I would trade Nasdaq. That's the highly volatile moves, and that's when most volume comes into the market. Once price is in my zone, providing it gives me the entry confluences, following my entry drills, then I will enter the trade. So for 2 hours a day, I can remain highly focused. I'm not going to lose concentration, and I can capitalize from these moves 3 times a week at least. Okay, so that's a quick rundown of support and resistance. See you for the next one.